Blockchain may not be booming the way it was at the end of 2017, but as the industry continues to mature, a growing number of use cases are developing. The question is this: which of them will survive long term, and how can investors choose projects that are likely to succeed in the long run? Recently, Finance Magnate spoke to Dave Hodgson, co-founder of NEM Ventures, the VC arm of the NEM ecosystem. NEM, or New Economy Movement, is an enterprise-grade cryptocurrency that has been designed for transactional and application layer use in the blockchain economy. We spoke on the ethics of venture capital funding, trends in blockchain projects, and what kinds of industries blockchain is most likely to appear in first. Okay, so Dave, can you just tell us a little bit about yourself and how you got involved with NEM Ventures?
Yeah, sure. So I'm a 15-year technology consultant that worked across public cloud and more recently in the energy sector, implementing various different industry solutions. Part of that led me to naturally end up at peer-to-peer blockchain trading, and the project I was working on at the time selected NEM as the preferred platform for various different reasons. That got me into the NEM community, and then I started to work with a few of the guys who have ultimately started up NEM Ventures. They highlighted a few challenges that they had with the community grant scheme that was running, and essentially helped form up the operational structure and the corporate structure for NEM Ventures.
Okay, so when you say that they brought up some challenges, what were those challenges that NEM Ventures was, formed in an attempt to address?
Yes, the NEM Community Fund, as it was previously known, was a very well-funded reserve pool of tokens that was set aside for the community to vote on proposals that should be financially backed or given a kickstart to get moving. Because it's a community grant scheme and everything was being run by volunteers, the workload just became such that it was untenable to try and run that with volunteers, and obviously with the bear market causing all of crypto to fall, it became a smaller finite resource, so it became necessary to start focusing on ensuring we were getting some kind of financial returns for the outgoings. So it was really just a maturation stage, I guess, of the community grant fund kind of coming of age and just getting too busy.
I see. So can you tell us just a little bit about what NEM is and why it's so unique in the cryptocurrency sphere?
Yeah, so NEM, similar to Ethereum and Tron and Dash and all of the other protocol level tokens and chains, is at its core a blockchain. It has a cryptocurrency on top of it called XEM or ZEM, which is naturally its first use case since it was the first token created. Similar to Ethereum, you can issue your own digital assets on top of NEM. Those are called mosaics in NEM's world, and they can be structured in a kind of akin to a domain and a subdomain structure that you might get on the internet. So you could define a root token and then have multiple child tokens down to a couple of levels. There's also several features that NEM has which don't exist on chain for other products, things such as multi-sig accounts or multi-signature accounts, allowing you to model out delegated financial authority and that type of transaction. So when we selected NEM for the project I was working on at the time, I was engaged as an enterprise architect to do an options analysis against various chains. We selected NEM partly because it had some features that didn't exist in other chains, and partly because it has a bunch of API layers or SDK wrappers that allow traditional developers to pick up the tool and run with it very quickly. So you don't have to go and learn a bespoke language. I can just get the same full stack dev that I have working on my own internal application to pick up the NEM APIs as if it was any other API, and with a bit of guidance as to how to use blockchain, just kind of run with it. So we could keep the development all in-house. So yeah, it's essentially a blockchain that's very quick to pick up and has features that don't exist on other chains to a certain extent.
So is NEM, is it sort of at its fully functional stage then? Like if I'm a developer, can I go in today and pick up the NEM API to form my own token or my own,
Yep, you can do that as a non-developer as well. So the public wallet is a browser-based wallet called Nano Wallet, and not to be confused with another project called nanowallet.io, which is something completely separate. But the wallet is downloadable from nem.io. You can download that as a normal business user or as a normal resale user, and create a mosaic right there in the wallet. So you don't need any technical or developer experience to do that kind of stuff. The chain's been live since, I believe it was 2015. I would need to check the date, but I think it was early 2015. So it's in public usage now and has been for 2 or 3 years. And this year, it's due to receive essentially NEM version 2, which is going to be called Catapult. But NEM version 1 is open on the public chain right now. You can download it as a private chain as well if you need a specific use case that means you don't want things on the public chain.
Okay. So I think you mentioned earlier that NEM Ventures is sort of the manager of the NEM Community Fund. But is that sort of the extent of how NEM Ventures fits into the whole NEM ecosystem?
Yeah, so the ecosystem is very flat with NEM. So with the various other blockchain projects, there are different types of structures that they've adopted depending on what makes sense for them. What made sense for NEM at the time is that the core developers, and there's actually a picture of this on NEM Ventures website, it's easier to visualize, but there's a set of core developers who do all the development for the public and the private chain repositories that can be downloaded. They're funded entirely separately from a combination of reserve pools and a company called Tech Bureau in Japan, who own a private enterprise type license for a version of the product called Midget. Then you have NEM Ventures, which manages the investment arm of the ecosystem, again from reserve pools. And then finally you have the NEM Foundation, and ultimately you have the NEM Foundation, who are responsible for acting on behalf of the community, trying to coordinate the community, focus on the NEM product and how the use cases can be easily communicated externally, ensuring that good governance is in place for the various different partnerships that are in place with the ecosystem. And then finally, obviously, we've got the NEM community, who could be anything from a one-man band developer to a systems integrator or someone who holds XCM tokens. And those 3 or 4 entities are brought together under a project management committee, which helps to rationalize down all the requirements for the developers, basically, and structure the roadmap and the delivery cycles.
Okay. So are you, sorry, as a part of NEM Ventures, are you part of the committee that makes decisions about which projects get funding?
I am, yeah. So we have an investment committee of 6 people, which is predominantly the directors plus a couple of advisors, and all the names are publicly available.
Okay, and so when you and the committee are looking at projects that you'd like to give some support to, some financial support, what exactly are you looking for?
Yeah, so we got 3 main things that we're looking at. First and foremost, we're an investment fund that exists for the benefit of the NEM community. So really everything has to tie back to that, basically. So we're looking for something that is going to be commercially viable. It's not just a effectively charitable donation. In order for the fund to be sustainable and to have longevity, obviously we need to make financial returns to be able to invest in future projects. That doesn't need to necessarily be quite as cutthroat as some of the more traditional investment houses might be. So we pride ourselves on being slightly nicer than most VCs, but it does still need to be commercially viable at the end of the day.
When you say nicer, do you mean just like, what does that mean?
So we'll give probably a little bit more coaching to some of the potential proposals if the idea and the team seem good, but perhaps the idea is not fully formed. Or some of you don't see it so much with the crypto VCs, but in traditional investment houses, you might see a VC effectively run down a company's bank balance by making due diligence last longer than it really needs to. So we try very hard not to engage in those types of behaviors. Obviously, if you can run the bank account down, then you can have a much more robust conversation about how much equity you should take for the same investment if suddenly the founders are broke. We would prefer to have a partnership with the founding team that means that they're more likely to succeed, they stay motivated, they want to stay part of the community, and also because we make financial gain off our budget in XCM as well. So if the project is successful and it's adopted, in theory the price of XCM goes up anyway. So we make financial gain off that as well as off the investment. So we can be a little bit more fluid in how we approach that conversation, basically.
I see.
But at its core, the project still needs to be commercially viable. The next thing we look for is that the idea is both a strong idea and the team can clearly articulate how they're going to make that idea a reality, basically how they're going to deliver it, whether they've got the credibility as individuals or as a group to do that, if they've done stuff in the past that's comparable, if they haven't, if they've got advisors around, essentially, basically due diligence to make sure that the guys are going to be able to hit the objectives that they're trying to meet. And then finally, we have to assess the benefit the project is going to have to NEM prior to investing. So whether that drives adoption, whether the project open sources its code and commits that to the repositories, whether they make partnerships with lots of other projects and allow them to be more successful on the NEM platform. The concept's very wide, but we do need to be able to clearly explain ourselves what benefit that brings to the ecosystem so that we can explain to the community why that project's being backed over another one.
Okay. So if I'm a developer, or I'm someone who has a project that I'd like to build on the NEM platform, and I'd like to approach NEM Ventures in order to get some capital support, what is that process like?
Yeah, so it's all done online as you'd expect. There's a proposal process on our website where you can download basically an NDA and a pitch deck template if you don't have one. Then we require probably an 8 to 10 page pitch deck from the proposal, just to give us an idea as to what the proposal's like. There's a quick form to fill in so you can give us a bit more information about what it is you plan to do, where you expect it to go, where you're up to already, because you may obviously be at the very start, but you actually might be coming in for a second round of funding or a third round, in which case the process is just slightly different in terms of assessment because there's more to assess. And then you submit all that to us and it comes in to either myself or one of the other two co-founders. We'll perform an initial screening of that just for a couple of hours, generate some basic questions, try and pick up on any information that's been missed, arrange a couple of phone calls for introductions, that kind of stuff. Then we'll take it through a couple more rounds of more of a deep dive where we'll get some of the technical guys to come in and check any technical claims are correct. We have an ex-commodities trader and investment banker as an advisor. So if it's more of a fintech opportunity, we'll get him involved to perform a bit more industry analysis on that side. Then we'll run it through an investment committee vote and the decision will be made. Typically that process takes from start to finish around about 2, maybe 3 months, just depending on how fast information comes back and forwards.
Okay. And I'm curious, do you see are there any sort of trends in the projects that you see coming to NEM Ventures for support? Are there, are they kind of, consolidated to any specific use case or industry application, or are they kind of all over the place?
Yeah, it's a good question. To be honest, before I started doing this, expected that to be the case, that we would find sort of trends or niches. It's probably a little bit too early in the NEM Ventures story really to know with any certainty which trends we're starting to see through. We have proposals across multiple different industries, people who want $50,000 and people who want several million, people who are very early stage pre-revenue, people who are going through Series A. So we've had about 60 applications now to date, and I would probably struggle to identify any strong trend at this stage, but I would expect by the end of the year we probably will start to see more of a common trend. I just can't tell you what that's going to be because I haven't seen it yet.
Okay, well, I'll have to check back in with you but so sort of from your perspective as somebody who's dealing with a lot of these new startups and projects, during the big blockchain hype that happened at the end of 2017, early 2018, there was like a blockchain project for literally everything, like blockchain for dog breeders, blockchain for just anything that you can imagine. And it was very trendy, and it, to a large extent still is very trendy, but there's more and more people coming forth and saying, hey, like actually this isn't necessary for everything under the sun, and it actually might make, certain kinds of products worse than, their centralized alternatives. So I guess in a longer term sense, do you think that blockchain is going to somehow, enter into every corner of life, or do you think that the industry is evolving more down some concentrated channels in certain?
So I think it's a really good question, and it's one that I think we'll see play out probably in the next 5 or 10 years. But certainly short term, it feels like it's going to play out more in fintech, healthcare, energy, logistics. There's some obvious industries that have some fairly large centralized players in them that either don't need to be there or could be done more efficiently. So I can see those ones starting to move quicker, and obviously fintech seems to be leading the charge, unsurprisingly, given it's the one with the most amount of money. But I do think that down the track we will see blockchain generally permeate into various different facets of life. How far that goes and how much I see it in my own lifetime, I'm still on the fence at this stage as to. I'm certainly a long way off being a maximalist and saying that this is going to affect absolutely everything in the world. I happen to live in a bit of the world where probably only half the houses in the village even bother connecting to the internet. I can't see most of those guys engaging with blockchain. Now, if you're talking about demographic, the likes of central London, central Paris, central Mexico City, obviously you've got much different demographics and different types of user bases, and I could see it permeating much more into the lives of certainly younger people and people coming out through school and uni now. I would expect to see it much more in most of their industries through their lifetimes. But we're very early in that adoption stage. I came through public cloud implementations as an enterprise architect, and there's quite a few parallels. I was around for the dot-com boom at the very start of my career as well, where similar to blockchain, there was a lot of promises made about how this was going to revolutionize every single aspect of every single industry and every bit of life. And it's simply not true. You just don't really get that type of wholesale swap out immediately. That kind of change takes 50, 60, 70 years to come in, really. So we're very early in this process, but it is definitely starting to have marked impacts on some industries more than others.
So switching gears a little bit, earlier this year, there was some reports on CoinDesk and other news organizations saying that the NEM Foundation was very low on cash and was planning sort of like a big round of layoffs and restructuring. So I'm curious how that played out. And so, did that restructuring really happen? And if so, at what stage is NEM now?
Yeah, sure. So obviously that article came out, I assume you're referring to the one around about the 30th, 31st of January.
Exactly.
So NEM Ventures and the NEM Foundation are two very separate entities. So I don't have a huge amount more internal information on the NEM Foundation than is available publicly. But I do work with the members of the council on a daily basis. So I have probably slightly more informal chat around the same information. As best as I can tell, that the article came out in response to Alexander Tinsman, the current president of the foundation, announcing that information publicly. So it was reported in a sensationalist fashion, and some of it was subsequently retracted. But the basics of it were that the foundation had about 2 years' budget for the first 2-year tenure of the council. That came to an end in December of last year, and the new council took over. When they took over, obviously it's public information, all the stuff that they found and why they felt the need to reorganize and replan. That restructuring, to my knowledge, has now happened. CoinDesk did a follow-up article towards the end of March, where Alex stated that close to 100 people had been made redundant or had been laid off, and that the funding had been approved, and that the organization is now focused on being transparent, having good governance, and focusing on the NEM product more than the previous couple of years, which had a bit more of a marketing focus. So to the best of my knowledge, the restructuring is still taking place, but it has certainly started with a vengeance. And I could definitely get in touch with a couple of members of the council if you guys want to ask them more questions on the detail.
Yeah, that would be great. I'll be in touch with you about that after this interview.
Yeah, no problem.
Yeah. So did that affect, that sort of restructuring, did that affect other parts of the NEM ecosystem in any sort of big ways? Or is it more
not particularly. We're quite isolated. So financially we have completely different streams of funding.
Okay.
and the management teams are fully separate. The legal entities are fully separate. We're even incorporated in different jurisdictions. However, obviously it does, because we're operating as part of the same distant family, if you like, or cousins.
Yeah.
Obviously, when one thing happens to one entity, does it impact us? And naturally, we hold a lot of our budgets in XEM. So that type of news isn't positive for the crypto price. So we have those kind of impacts to manage. But really, that's been a short-term issue. The price has recovered since then. Our budgets are sitting where we were expecting them. In terms of really big impacts, not particularly beyond noise and a bit of PR management.
All right. And you mentioned that, you know, this restructuring was reported in a sensationalist fashion. And then I'm curious, as someone I'm here on the media side of the cryptocurrency industry, and you're sitting as someone who's on the, I guess we could say, production side of the cryptocurrency industry. Do you see sensationalist journalism as a major problem in the cryptocurrency industry, or is this just something that comes up every once in a while?
It just comes up every once in a while. It's not any bigger problem really than it is in traditional media or media in other industries. There are miscommunications between projects and the media all the time, and there are also people in the media who, obviously, by making sensationalist headlines, lift readership, etc., completely understand why it happens. If I was sitting in the same seat, I would probably do exactly the same thing. But it's not something really that I think is as big a problem as it used to be, maybe say 2 or 3 years ago. Obviously, we have publications like CoinDesk, Cointelegraph, Finance Magnets that are doing a very good job, much more structured than even than a couple of years ago. So it feels like the crypto and the blockchain media industry is maturing along with the crypto and blockchain industry in general. And ultimately, we all codepend on each other. So,
yes, absolutely. So, switching gears a little bit back to what we were talking about earlier. So, one of NEM Ventures' first projects was called Bimba. Can you tell us a little bit about that project and sort of how it's evolved with NEM Venture support?
Yeah, sure. So Bimba incorporated back in 2014 in New Zealand, based in Auckland. The CEO is called Sam Blackmore, and he actually set up the first Bitcoin meetup in New Zealand, I believe, but certainly in Auckland back in 2014. So he's been around for quite a while. And he saw a gap within the New Zealand market of essentially traditional finance services not being offered to crypto investors. So services such as regular monthly savings, allowing you to buy small portions of crypto for, I don't know, for your children or for yourself as a savings scheme. Now you see that quite frequently in equities or in bonds or various different trust type setups. It just didn't really exist in crypto when he started. So he created that as an initial offering and built up a reasonably decent customer base in New Zealand that I believe got up around 6,000, was fairly stable, and even through the crypto winter, the bear market, his volumes haven't been impacted by as much as some of the bigger players. Obviously, relatively in terms of percentage, the bigger players blow them out the park in terms of absolute numbers, but their retention levels were very favorable when compared with companies like Coinbase, for example. Sam then expanded beyond that to integrate the ability to instant buy and instant sell from an exchange where you send money from your bank account or send fiat from your bank account to Bimba. Bimba handle the purchase and send digital assets back to the wallet which you control. Now the key difference there, well, there's two key differences. One is you go from fiat to crypto without going through an exchange, just by sending it to Sam and he sends it back to you. It's quasi P2P, but it's not P2P. And also he sends it back to a wallet that you control. So you're not relying on any kind of treasury management, any kind of custodial services like you might do with some of the bigger exchanges, because it's coming back to your wallet, and they'll help you set that up as a new user. So they help onboard newcomers to crypto by taking you through the process of setting up Bitcoin, ETH, and Zen wallets now. Initially, they only offered Bitcoin and Ethereum. we're a long way through the process of integrating XEM onto their platform already, and at the same time we're expanding out of New Zealand into the UK when we encountered them. So they're now one of the few companies in the UK, and I think I'd probably be right in saying the only company in the UK to be able to sell crypto using our faster payments network. Now that faster payments network is usually only open to commercial banks which have access to the core banking infrastructure, but Bimba, through a series of partnerships and their own development, also have access to that core banking infrastructure. So what that means as a UK citizen is I can send money from my bank to Bimba and it turns up in seconds. So Bimba will then turn that into crypto and send it to my wallet, and that whole process happens very frictionlessly. So you're talking minutes or maybe up to an hour or so, rather than the usual sort of day or two to go through that process. Obviously, that's going to vary country to country because not every country has the faster banking network. Most of the EU does now have it, so the expansion plan from here is for them to move into Australia and then into the EU. NEM Ventures backed them largely because of the team and the vision that Sam has. He's very committed to where he sees the company going. He can explain it very, very clearly. He's done it, so he's already got a product in place. He's already generating revenue. He already has XEM implemented with equal billing to Bitcoin and Ethereum. Now in time that will expand out to other coins as well, I've no doubt. But from NEM's perspective, obviously it gives us a prime billing alongside two massive cryptocurrencies, and it gives us a fiat on and off ramp direct from pounds to ZEM that didn't exist before, and that does it faster than people like Coinbase. So there was various different elements to the investment that made sense from our perspective. And he's also backed by the New Zealand government. So the New Zealand government have a program which is similar to several national governments where they'll provide matched funding essentially. So in the UK that's called Innovate UK. In New Zealand it's the Callaghan Institute. There's a couple of others in Australia and the US that are similar. And they've backed publicly to the tune of, I believe it was about 3 million New Zealand dollars. So obviously having that kind of backing already in place helps us a lot with the due diligence when we check if the project is really serious and whether they have real credibility. If they manage to stand up in front of a national government with a crypto product and get backing, I mean, they made national headlines doing it. That infers a level of credibility which we were able to check with our own networks, who also happen to be some of the early stage investors.
Okay. So I'm curious, as the ICO boom has kind of quelled over the last year and a half, let's say, have you gotten more or more projects approaching you looking for funding, or has it kind of remained the same?
It's hard to say because we didn't really exist before the ICO boom. So, because we came in off the tail of it, weirdly, we're probably one of the few investment arms that started right in the middle of crypto winter.
Okay.
So, timing-wise, it made sense because we needed to manage the funds in a more sustainable fashion. But yeah, it's probably most of the LVCs, I would imagine, spawned out through 2017. Generally, we incorporated in December 2018. Okay. What I can say though is that the early applications that we received were quite frequently in the form of white papers, which are not really appropriate for traditional investment due diligence. A lot of the white papers that came out in the ICO boom, particularly that were raising money very quickly and were being produced very quickly, probably really wouldn't stand up to any serious due diligence a lot of the time. So what we have seen though is that those applications and the process behind those applications has now changed. So the early ones were probably light is the nice way to put it, that didn't have enough detail in for us to really assess it. So we found we'd be asking a lot of questions to get hold of things like business plans and financial forecasts and just the kind of stuff you'd usually expect a normal company to have.
Right.
What we have found now is that we're getting a lot fewer of those types of proposals, and we're getting proposals from much more mature businesses and approaches. So we will generally get a business plan within a couple of days of the proposal coming in. They will be backed by financial forecasts and market analysis, and also the usual tech stuff to make sure that the product can be built and can do what they want to do. But we're getting a lot more of the, I think that just the industry maturing in general, that people are realizing that the free money is not really around in the same way as it was, and that actually you do have to justify it. You have to have a vision and how you're gonna get there, how you can deliver it, which is ultimately good for the industry and for the projects and for us. But yeah, certainly in the early days we had a few of those sort of ICO white paper type proposals.
Yeah.
But
Do you think
thankfully
that
it is changing.
oh, it is, yeah. Well, do you think that change is a result of, um, sort of a difference in the demographics, like the kinds of people and the kinds of projects that are getting involved in the crypto industry, or do you think that it's the same people? It might be the same two guys who started a project in their basement or whatever, but now they know better. They know better than to just type out a white paper and with the words blockchain and cryptocurrency all over it and just hope for the best.
I think it's probably a combination. So I don't think there would be one silver bullet to that question. Definitely the people who were perhaps at university or just leaving school when the ICO wave started, or maybe 3 or 4 years ago, naturally they are now a bit older. They have been through that wave. So any proposal that they submit subsequently is likely to be written in a different way. And the ones who are coming through behind them that don't yet have that experience simply don't have the opportunity to try and throw those white papers around because they just don't get any traction. And obviously the press, the wider press outside of the crypto media now don't cover it as much. So the general populace isn't probably as exposed to that information as it was previously. So it doesn't seem like such a big, easy opportunity. Naturally within our own industry and our own PR coverage, such as yourselves, we still see plenty of that coverage. But I think if you were to ask sort of Joe Blogs on the street, they would probably feel like they don't read about it as often as they used to.
Yeah, true.
And yeah, the other side to it, I think, as well, is that the easy investment isn't there because the currency prices have fallen. So previously, when people were feeling very wealthy and getting wealthier every week, it's a lot easier to justify spending $500,000 on a new investment if you didn't have that last week. Now, if you lost 500,000 last week as the cryptocurrency fell, suddenly justifying another 500,000, you start to ask a few more questions. So I think probably the investors have got more mature in addition to the projects getting more mature.
Okay. Do you still see ICOs? Well, I don't. Maybe still isn't the best word, but do you see ICOs as, sort of the best way for cryptocurrency projects to earn startup capital these days, or do you think that approaching a venture capital firm like NEM Ventures, or even holding an IEO or a privately funded round is a more effective way of getting startup capital?
Yeah, I think probably raising ICO funds now is very, very difficult. I think you would probably put way more effort into doing that and doing it successfully than you would do taking any of the options that you suggested after that. It's something that, because it's no longer as easy to do, requires much higher level of investment, much more marketing hype, a team probably that's done it before, more jurisdictional knowledge, more legal knowledge. So it's just not as simple as it used to be, I guess. So I think probably I'd be surprised personally if we see that wave come back in terms of ICOs, but I do think IEOs and STOs are likely to replace that short term as we get more of a normal approach to that and it becomes more accessible, basically. So right now it's really only accessible if you've got enough capital to be able to pay the right advisors or somebody to go and do some engagement with the SEC or the FCA or somebody. Whereas now that we're starting to see 2 or 3 of them come through, we will get templated approaches to it. Obviously, we've got the exchanges now looking at IEOs, and they will give you a very structured approach to that. You know how much it's going to cost. So I think we will see a wave of that coming through, which will be a lot easier than trying to raise an ICO, where a lot of the time it's questionable whether it's really a utility token or it's a security or et cetera, et cetera. You remove all of that uncertainty for the founding team and allow them to focus on what's actually important, which is starting the business and building the product, not in fact raising funds. But it's the same problem that happens in traditional finance, that founding teams can get wrapped up spending months or years trying to raise funding and not actually building the business themselves. So really, I would encourage any new proposal to have a quick look at what seems most sensible and easiest for the level of funds that they need right now to get through the next 12 to 18 months, get into a position where they become investable to bigger traditional finance. That route hasn't changed, and I don't think will change in any rapid way in terms of either an exit or a serious investment in growth. but the ICO jumpstart seems to have gone. There are a few incubators coming through now as well, which are offering sort of startup grant funding of 20 to 50 grand a year. 20 to 50 grand up front to kind of kickstart you a little bit, where the ICO would have just dumped a lot of cash in. You'd have had that from day one. If you use that funding sensibly, you can get the product, the proof of concept built. You can do a bit of market testing. That way, when you come to an investment house for proper investment, you have an awful lot more intrinsic value in the company. So you're giving up a lot less of your own company because it's a bit proven and they're taking a lower risk. So I think that's a long way of answering the question, but I think basically the ICOs are probably now pretty much done.
It's over.
And we will see IEOs and STOs starting to take over.